Okay, folks, welcome to Market Wrap for the 18th. Okay, this morning we got some economic data. Retail sales, huge miss. Ex autos, still a miss. Industrial production went from flat to negative. Capacity utilization, lower than expected. Really not good stuff in terms of the vibrancy of the consumer and manufacturing. So you take a look at the probability of a Fed rate hike, and it actually went up today for July. Now, I promised yesterday that I wouldn't go checking forward-looking months, but I'm going to break that because I want to see whether or not they modified September. And yesterday, we were at 84.5% probability of a quarter basis point rate hike. It actually increased today. Very strange that the probability of a Federal Reserve rate hike actually increased into September. And with that, equities initially opened down, at least the Trip Qs, NASDAQ opened down. And what happened with Microsoft? Well, Microsoft rallied today from peak, well, I should say from trough to peak, over 7%, nearly 7.33%. This is insanity. This is utter insanity. Based upon this, Meta and Microsoft team up to offer new AI software for business. I mean, really, that warrants that type of surge in market capitalization. I think they're absolutely crazy. And we profited from it. We shorted here, got out here. But this is the level of mania that we're seeing right now. And tomorrow, we're going to get Tesla, Netflix, IBM, all coming out after hours. And man, they had better beat, because the PE ratio on the S&P 500 right now is at 31.75. These two are measurably above that mark. Here's Netflix, PE ratio 51. Tesla, PE ratio of 76. And remember that last quarter, Tesla guided down, not up. So in short, tomorrow evening is going to be a very interesting after-hours session. Okay, let's get to it. Let's go to the price action today in the markets. Yields down, but rallied off their lows. Stocks still weak. Not much to talk about. Bonds, continuation breakout out of this wedge formation on very light volume. So we've seen this before. We've broken out, failed, broken out, failed, broken down, recaptured. I'm not entirely buying into this breakout, to be honest with you, especially when you have market makers out there, market participants that are betting on future rate hikes. The dollar continues to consolidate at support, very light volume today. Not really all that much to talk about here. You know, we can take a peek at that 30-minute chart I mentioned the other day. We expected a rally. We got the rally. Is there any follow-through? Not really yet anyway. Possible higher low, no higher high yet. So I'm still on the fence about going after these mining stocks. We did open up on BHP. I spoke about that yesterday. We'll talk about that chart in a moment. The VIX, I just can't believe how weak this is. It looks as though we are going to break to new lower lows. Trying to get decent premium by writing options is very difficult right now. Let's go to an intraday chart. 30-minute will do. This is a horrible chart. It looks as though we're going to break lower here. So I could be as skeptical about earnings, this, that, the other thing. Right now, the VIX is telling us S&P 500 is going up higher, because this appears to be a head and shoulders setup. Left shoulder, head, right shoulder. Taking a look at a weekly chart, you know, at current, we're down below support. The week is still very young. A lot can happen here. We do have options expiration on Friday. Perhaps that's influencing the VIX at current. The Dow Transports broke out today. I mean, we really need to go to a weekly chart to see where we're at here. I mean, this is solid. This is a solid breakout on a weekly chart. Since the bear market trough, the Dow Transports on a weekly time frame are well, it doesn't matter weekly or daily time frame, just the chart we're looking at, is up 36.16% from trough to peak. Dow Jones Industrial Average. I spoke about this over the weekend. I was expecting a widening out of the rally into the Dow Jones. We got it. Breakout today. And this is going up higher. Look at the volume here. S&P 500. It looks as though it's going up higher. The caveat is that we have the upper band of resistance immediately above. So let's do a hypothetical here. All these companies come out and they beat by a mile. You have a lot of resistance immediately above. I believe that the optimism for these stocks beating is priced in. And if there is a miss, these stocks are going to get annihilated. Trip Qs, daily chart, very close to the upper band of resistance, extremely overbought. Volume was very good today. But the problem is, or the reason for that rise in volume was the closing price action. Because if you take a look at a 15-minute chart, we rolled over, and we did so on pretty heavy volume. Small caps, very strong today. Up 1.23%, light volume, but not horrible volume. The banks, very good showing here. And they broke out above the upper band of resistance. It looks as though they're probably going to move up higher. Volume, strong. 15-minute chart, a little bit wonky, but look at the volume into the close. Wow. You see, net, this final 15-minute bar, not much in terms of price change. It was higher, it was lower, but we finished somewhere in the middle. But look at the volume. That's a tug of war between bulls and bears. That's indecision. But the bears took the day. Technology, daily view, up 1.13% on volume. And that's a new all-time high. Consumer staples, struggling here. Nobody wants these. This is a safe haven play. Volume very light, though. Consumer discretionaries. Retail sales missed by a mile. And discretionaries continue their trek up higher. This is a weekly chart, by the way. They continue up higher. I think they are going to proceed higher from here because the markets, they could stay irrational a lot longer than you could stay solvent. Outside reversal bar on the session, implying that we're moving up higher. Volume rose today, but just about average. Very extended. DBA. When you see a chart like this, you have to say, wow. Yesterday, we had a very bearish candlestick. Today, complete negation of that candlestick on volume. So for those out there that are thinking that food prices are done going down, you're right. Food prices are going up. And I would argue that the rise in energy, the rise in food prices, that's probably the reason why you're seeing market participants pricing in Fed rate hikes. Energy. This is West Texas Intermediate Crude daily chart. It was up 2.13% on massive volume. Very bullish setup here. Gold rallying. Broke out today, in fact. Above 1980. Yep. By 80 cents. Broke out. Nugget. Continuation move up higher. Up 3.75%. That was volume. Volume is really good. GDXJ daily view. Broke out. Recaptured support on volume. Silver rallying. So what is the market telling us here? Silver up, gold up, mining stocks up, food up, energy up, inflation. I think we got a respite, a pause, and it looks as though we're beginning to resume the march up higher. Silver miners, I should say, they were up today. Good day today. LABU, that was down today. Stiff resistance above. Let's wait for better entry. Emerging markets down slightly on the day on volume. A little bit of distribution there. NVIDIA. So the strategy here with NVIDIA, we have the strangle on NVIDIA. They expire on the 4th of August. I am very, very reluctant, given that we are this overbought on NVIDIA, and with potential catalysts out there that could send stocks measurably lower, given the overbought condition. I'm very reluctant to go rolling up puts with such limited time until expiration. So why don't I roll out that trade to a later date? Because I'm worried about getting caught up in NVIDIA earnings. I don't want to be around their earnings report. I want to be out of the trade. Now, when you take a look at the 15-minute chart of NVIDIA, we reached extremes on the stochastics, and I know a lot of people don't use them per se. I do religiously, and whenever you get this extreme, tapping up and into that third, I meant to say red resistance level. I was about to say third standard deviation Bollinger Band, but this is similar. You rarely get up here. When you do, it doesn't end well. So why am I going to roll up puts when I believe that we're going to get a further pullback here, and that'll only pressure my position? Meta, we also have a ratio strangle here. A cluster day, this could break out. Volume is diminishing. We pulled back to the lower band of the rising uptrend channel. We have the 325 calls above. We've sold them. We are not long of them. So let's take a look at what the market makers are expecting by Friday. They're expecting a $9.21 move by the end of business on Friday in either direction. So our wings, our strikes are still outside of the market maker anticipated move. Volume into the close was good. So we could pop up higher here tomorrow. BHP Bulletin. So I think we need to draw some lines here and get disciplined because we plan on adding here. There's your upper band of resistance, lower band of support. So right now we're in a trading range. We have the moving averages moving up, which is a good thing. That's what you want to see. Volume was light today. So I don't see a compelling reason quite yet to go adding more to BHP Bulletin. Now, normally, these shares, this is an Australian company. So obviously, when we open up here in the States, these shares open up in the States. This is repriced for how they traded over in Australia. So if we break out above 62.90 and close there, well, we're going to start wanting to add more aggressively to BHP. And that is it for tonight, folks. Big day tomorrow. Huge day, in fact. So get your popcorn out. It's going to be an interesting market close. So I'll talk to you then. Be well.